Melissa Techie joining us from the Money Desk. Melissa, we're talking PwC. They brought out their Outlook report, and as expected, of course, load shedding having that impact on pretty much everything.
They're talking about a polycrisis world, meaning that there's different crises affecting each other, impacting each other, and obviously creating very intricate problems. But let's talk to Lullu Krugel. So, financial advisory firm PwC has flagged the country's electricity crisis as a significant risk for food prices. In its latest economic outlook report, PwC cites other challenges such as a growing skills deficit, which will hamper economic growth. Let's bring in Lullu Krugel, the partner and chief economist at PwC, to unpack this further. Lullu, thank you for your time tonight. I'll get to the broader economic outlook in a moment. But first, we've heard from major retailers in recent months that food security and affordability is being threatened by power cuts. What has your analysis revealed?
Yeah, unfortunately, we have been all waiting with bated breath for food inflation to actually slow down. But it has remained sticky, and there's a couple of reasons for it. One of the main reasons being the impact of load shedding on the cost of doing business. And, if you look at the entire food supply chain, the Reserve Bank has also done research towards the end of last year to actually show that one of the industries that has been worse or impacted the worst by the load shedding has in fact been the agricultural industry as well. So if we look at all of that, unfortunately, the supply disruptions impact on costs. Food producers that have to make different plans and other plans, the impact on logistics, all of that has resulted in food prices remaining sticky and unfortunately remaining high as well.
Lulu, we've heard from the Reserve Bank, Lesetja Kganyago, suggesting that in an interview that because inflation remains high, interest rates will also remain high. And that's a similar message we're getting from the American Fed. And that's not the best news for consumers.
No, I think South African consumers are under tremendous pressure. If we look at, as we've already discussed, inflation combined with that slow economic growth, combined with that interest rates that have increased to levels that we saw way before COVID. I'm hoping, and we are hoping, that we are at the end of the rate increases. But the fact of the matter is that rates will probably remain at these high levels for quite some time, and we don't foresee that interest rates would start decreasing very rapidly before maybe even well into next year. So, if you look at the levels of indebtedness of South African consumers, that is already a challenge as well.
So also mentioned in your Outlook report is the concern over skills, and the report suggests we don't have enough of it to boost the economy or help us with our energy transition, and specifically our green skills.
Unfortunately, if you look at where we are in South Africa, we're in a very strange and difficult situation where we have very high levels of unemployment, but combined with that also scarce skills in certain areas. And as you mentioned now, one of the areas that we've researched in particular was the availability of green skills and the skills that we need actually to transfer our economy, from the coal-intensive economy that we're in into a greener economy, but also in particular to address the energy crisis that we're sitting with. And to be quite honest, we don't currently have the right and correct mix of skills, the right skills available to actually address that. If we look at the type of skills that we need, highly technical skills in specific green areas, if we look at technology, for example, the so-called fourth industrial revolution type skills, those are unfortunately the areas where we're falling short. We're not the only country in the world. It's not only a problem here, but it is a significant problem for us, especially if you keep in mind the fact that we have the highest unemployment rate in the world, and combined with that, we are sitting with areas where we just can't find the right people as well and the right skills.
Lastly, Lulu, there are some light in some areas. You don't see South Africa in a recession. Why is that?
I think it's, we were quite relieved and quite surprised when the GDP numbers for the first quarter of this year was in fact published, when everybody thought we would move into a technical recession, and we didn't. And I think The positive news is that there's been some surprising upside in the downside that we are seeing. With the economy being under so much pressure from energy supply, we've seen some reaction from other parts of the economy, importing of solar panels that has actually gone through the roof, different plans that private sector is making, and those kinds of investments is helping a little bit. However, I must say that it is skewed. It is probably more focused towards higher income households, more focused towards the larger businesses that can afford these alternatives. And if you look at the impact on the broader society, it is not equal at this point in time. We are seeing that lower income households, lower skill levels, smaller businesses, entrepreneurs, etc., is definitely feeling the pinch of what is happening at the moment.
Thank you for talking with us this evening. That was Lullu Krugel, partner and chief economist at PwC.